BlackRock continues to be in the news, and today we're going to be breaking down a little bit more of what they are up to. I think you guys will definitely want to stay around for this one. It's a good one. My name is Paul Barron. Welcome back into Tech Path. I want to thank our sponsor today, and that is iTrust Capital. If you're looking at long-term holding, this is one way to do it, and that is through a crypto IRA. You can buy, sell crypto as well as gold and silver over at iTrustCapital.com. The cool thing right now is that you can still edge this in for your 2023 tax benefit for contributing to an IRA. So up till the 15th of April, you can do that. So don't lose that opportunity if you are considering it. Make sure and use our link down below. It will give you a $100 funding reward if you decide to go that route. All right, let's get into a lot today around real world assets, tokenized treasuries, and the future of maybe where stablecoins and other things are going to be going. You look at the size of the tokenized treasury market right now, again, over $1 billion. We talked about this a little bit before. I want to zoom in on something right here. You're going to notice something, this little project right there. Well, that is BlackRock. It's called BUIDL. And this is the kind of movement we continue to see. Look at the variation there between BUIDL and FOBXX. So this is a pretty significant move, I think, on BlackRock's part, which is going to open up into, I think, some very strategic moves overall. I want to go to a clip here that breaks down a little bit more about what BUIDL is and what they're up to. Listen in.
BlackRock has, I think, $800 billion of cash management products, they call it. So these are funds that help companies manage their cash. So the fund contains overnight repos and 3-month duration treasuries. So it will give you the same yield that the Fed rate gives you today. So it's within the realm of tokenized treasuries, but I will say it's a bit more sophisticated than just taking a treasury and tokenizing it. This is essentially a money market fund, correctly.
All right, so what you had there was Carlos Domingo, who is the CEO of Securitize. We talked a little bit about this as a Miami-based company that was a smaller operation that was able to lock in with BlackRock and be able to do this. So a pretty significant position, I think. And if you look at the token right now, BUIDL overall, already moving in at 280 million. All right, one note here is that it does update every day at 3 p.m. So by the time this airs, you could see this actually quite a bit different. We'll see today. I want to go over to a couple of clips here that kind of break down some additional ideas. And this is more around, could BUIDL actually have airdrops? This is where it gets interesting. Listen in.
The way we're doing it, though, that is very differently, is that once a month, and, hopefully one day this will not be once a month, it will be block, because from a technology perspective, there is no reason why, tokens are infinitely divisible, right? So you could think of a scenario where, every block on the blockchain, you're accruing 0.0001% of a token, and then you get all those tokens there. But today, we walk before we run. It's once a month. And it's kind of like an airdrop if you want, because from an infrastructure perspective, we basically once a month, we, calculate in our platform, look at all the holders on chain, see how many tokens every wallet has, etc., and then just run one transaction on the blockchain that basically does all their airdrops to people. So from an operational perspective, it's a super efficient way of doing it. So
is that denominated in a stable coin, or is that denominated in BUIDL tokens? And
it's in the BUIDL token. It's denominated on the BUIDL token. The BUIDL token is not a stable coin; it's a security. I know crypto people don't like that term, but that's what it is. So, and by the way, I think this helps people understand that the fact that things are securities is not necessarily a bad thing.
So a good explanation here, because it does change kind of the dynamic here of what BUIDL is going to do. The question would be, and this is a clip that kind of talks a little bit more about, could BUIDL actually kill banks? Listen in.
I want to take my BUIDL tokens that I've accrued over the past year, and I want to cash that out. How do I do that?
At the moment, at launch, there's a redemption wallet that is controlled by us, where you basically send your tokens to a redemption wallet, and then that trigger basically liquidating your position. And then we will wire you money to a bank account. What we're working on is that there is a much better, more crypto-centric process where, the BUIDL tokens get redeemed on chain, and you get stable coins into your wallet instead of getting dollars in the bank, etc. This product will be bankless. so but at launch is not.
we're part of the way there then with BUIDL to kind of going bankless.
So interesting that this could take place, because it does kind of circumvent the whole banking process. Right now, if you cash out a security, you've got to go through the whole process that is traditional. this changes things up pretty well in a big way. So I think as we continue to see the strategy here where BlackRock is going, this could start to alter a lot of the infrastructure. And I think this is what Larry Fink has been talking about and been so excited about. Here is another clip from the same interview that talks about BUIDL coming to Uniswap. So now we're talking about decentralized exchanges. Listen in.
Could I like spin up a Uniswap liquidity pool for BUIDL?
So this is unfortunately not fully permissionless because it's a security. So yes, you can transfer your tokens, but it has to be to another authorized party. So somebody else that has been onboarded in the fund. In terms of interacting with DeFi, ultimately, we want to do that as well. Obviously, like from a technology perspective, is super interesting, both the lending side as well as the automated market making. I think this is coming. This is unavoidable that is going to happen. I think the DeFi space will have a pure permissionless, side of things, but it will have also a sort of like, my team and I would call it hi-fi, like hybrid finance. So it's not fully decentralized because that's never going to work well with regulations.
So this is a very interesting part of the conversation because it does get into this hybrid approach of what DeFi might look like, especially if you're dealing with something like BUIDL, which is being a security. And this could open up the floodgates also for decentralized finance, which again would get back into the benefit of really changing the dynamic around the monetary system and traditional banking and how it's done. In other words, think about if you would hold all of your assets in a decentralized exchange and a DeFi wallet. That would be a good example, and be able to do exchanges with securities and all that. There's some very interesting things happening. I think BlackRock is beginning to see where this potentially could go. This clip talks a little bit more around BlackRock and did they choose USDC for this? Listen in.
And inside, I was poking around inside of the contract that like all of crypto Twitter found and started playing with over the last week. And there's actually a redeem function. It's deployed by you guys. Okay, so great. You're exactly the person I want to ask then.
I'm going to tell you what it is for, but
this redeem function swapped out 25 BUIDL tokens for 25 USDC tokens on chain, specifically USDC. So like what happens? What happens under the hood when the redeem contract is called?
This is our contract that is on chain, so people, very quickly find out what we were testing. So as I mentioned, the idea is that you can do on-chain redemption of the token against stablecoins, in this case, USDC.
Like it's basically like a BlackRock has opened a branch, bank branch on the Ethereum network, and what's cool about it is we can see what the bank branch does. This feels like almost like a liquidity portal from TradFi to crypto.
I'm not going to confirm or deny I can't deny the function because it's on chain and everybody else in it. But
yes,
yeah, I like that. Ryan was able to kind of get that out of him. Kudos to the Bankless guys for really kind of going in with Carlos and diving in a little deeper here, because this is some very interesting strategy that is starting to develop. And I think it's, obviously it's very early days, but it does mean a lot for DeFi. It means a lot for Ethereum as a network. And I think it also means a lot for institutional to understand what's really happening. We'll get into a little bit more of that here in a bit. I also want to go to a clip where they were talking about Tether and whether or not they would use BUIDL as an asset. Listen in.
This is BlackRock we're talking about. Going to take a long time for them to get more comfortable with like kind of like a DAI type of primitive or like a Tether.
As you know, Tether, one of the problems with Tether is that the lack of transparency on their holdings, right? For some reason, they can't come up with an attestation of their underlying assets, etc. By the way, Circle doesn't have that problem because the Circle Reserve is managed by BlackRock. You can think in a scenario where somebody like Tether, if they really wanted to, convey trust to the industry by having transparency into their holdings, they will hold the BUIDL token.
They just buy BUIDL.
They buy BUIDL. Buy BUIDL is probably very similar to what they're buying anyway, because apparently Tether move away from, doing commercial paper and things that are more risky in nature. Now the interest rates went up, so just buy BUIDL. People can see it on chain, and friends like Martin from the One Time Protocol that has announced that he's going to do that with his yield-bearing stablecoin is going to buy BUIDL, so people will be able to see the attestation.
So that right there is a huge step in the potential for Tether if they actually did that. Because remember, Tether has been holding commercial paper, all sorts of different securities to be able to back up that that base and that reserve capital to fund, the Tether token. So if they were to do that, all that would come on chain and of course would be a lot more transparent. That would be a good thing, I think, for Tether and a good thing, I think, for crypto in general. But the market size could be quite interesting here. Carlos goes in a little deeper on just how big this could get. Listen in.
So we issue the first tokens on Thursday 21st, and then as of Monday 25th, we're hitting this afternoon 150 million in AUM. By the time this gets published, it's probably going to be 300 to 400 million. I don't know, depending on how the inflows come. But my sense is we issue tokens only once a day at 3 p.m. So we receive funds all throughout the day, and then every day at 3 p.m. you will see new tokens being issued and hopefully grow. In terms of how big can this get, so that those are like billions of dollars already. Then there is the billions of dollars of on-chain stable coins that are not necessarily earning a yield. So there's another like few $1 billion. The third part is that all the stable coins themselves that could use this as their underlying. So that's another like $100+ billion. So this could get really, really big.
I could see a future where a distributor, someone like a Coinbase, for instance, or a MetaMask with a wallet, basically has a high yield option for retail in their wallet where they get a cut of it and they go through all kind of the securities regulation, but underlying all of this and the source of the yield is something like BUIDL.
I agree.
Yeah, so this is really getting into self-sovereign finance. This is something we talk about quite a bit. And it is decentralizing it to a certain extent, almost with this hybrid approach, which is kind of the intriguing part here, that what Securitize has been able to do with BlackRock. So I think that in itself kind of has uncovered a potential instrument here for the future of finance. And I think a lot of people have not really seen this coming, with the exception of a handful of projects out there, whether you look at what Avalanche has been able to do, along with where BlackRock is going. This last clip goes into BlackRock and what could they be tokenizing next. Listen in.
For the first time in history, you have on the same ledger with the same underlying technology, you can represent securities and cash alongside. Mm-hmm. And this is the BUIDL token is an ERC20 token. USDC is an ERC20 token. So now you have stablecoins as the most successful use case of tokenization. The next one is securities. But then credit is the next one that has less liquidity but higher yield than a different risk profile. We have done a tokenization of a fund with Hamilton Lane, which is a $1 trillion asset manager. It's not 9 trillion like BlackRock, but it's pretty big, I can tell you. And then Hamilton Lane has a product with us called Scope, which is a tokenized credit fund. Because the banks, when they went under last year, and they've stopped giving a lot of credit. So the private credit space has exploded.
So talking about tokenizing private credit, I don't know that I would agree with it that it has exploded. This is currently active loans, about 600 million. You can kind of see some of the breakdowns here within it. This is over on rwa.xyz. But if you look at the active loans by value by protocol, there has been, this goes back to 22, where it was pretty significant. Don't forget, there was a couple in there that you probably will recognize if you've been watching our show and watching things. One of them, of course, is Maple, and this one might be one that could come back, but we'll see. All of these are riding right now pretty much on Ethereum, with exception of Credix, which is, of course, on Solana. So I think it's still very early, but credit is going to be one of those markets that would be the extension for private capital to start to move into some advantages that this kind of model would work for, especially if banks are a lot tighter on credit, and especially if this starts to open up to, let's say, just general business, not even retail. So pretty interesting stuff right now. All right, so with this move that BlackRock has been making, what we're starting to see now are more projects coming out. This was a good example, Ethena enabling the internet bond. So we're going to see a lot of different and very innovative instruments, I think, starting to take place. If you look over on X, here's Ethena Labs right there. ENA is now live. And this token, of course, has already started to move pretty significantly. If you look at the chart here already, this is just in the 1 day. Right here's the 7 day, moving up. And if you look at liquidity, let me kind of zoom in on that right here. On market cap right here, you've got volume at about 1.8 versus actual market cap at a 1.2. So that again, just showcases the opportunity of what this might mean going forward. Again, decentralizing and creating these hybrid approaches, this is bad for banks. I think this starts to show the format of how crypto, how blockchain, and especially tokenized assets are going to really shift the entire financial community going forward. Huge deal. All right, so another story right here, Avalanche, really taking kind of the lead here in terms of what else could you tokenize. They are moving into the potential here for a tokenized fuzz fund for diamonds. And a couple of points here, Diamond Standard Fund is listed on the regulated Oasis Pro markets. This is all eligible for IRAs. So if you go back and look at what else you could put in IRAs right now, you can put gold and silver. Could we see that now coming down the pipe for diamonds? This is a $1.2 trillion natural resource, so another big asset out there, accessible to investors and a lot more convenient and tradable. Again, back to these funds that could be going there. So could we see diamonds as a part of the future of where all this is going for IRAs? Here's Oasis right here. Remember, Oasis is a term or a tool set for these institutional partners, and you can kind of see the supported blockchains within it. All this are riding on Avalanche. So that's the key here. All right, so one of the big reasons, of course, is this right here, 7 of the future, Avalanche. The reason they chose that is this whole interoperability that you see with all these other chains. And I think that, again, which has been a big benefit for what Avalanche has been able to do with their subnet architecture, all of this is very positive for the real world asset side, especially around tokenized securities. Now, let's go to a clip here, because one of the chains that really we haven't been mentioning a lot on this is the strategy around what Cardano is doing. This is a clip where Hoskinson takes a little bit different approach. Listen in.
So he says, I have been investing in building on Cardano for nearly 3 years now, but I'm very worried about the chain's future. Number one, stablecoins. I won't beat the dead horse too much, but Cardano will never succeed without major stable coins. Past attempts have failed to provide deep, liquid stable coin, and progress on this front has been severely lacking. There's been some attempts to do wrapped assets. There's been some attempts to bring Circle into the fold. And obviously, there's the algorithmic stablecoin play with Jet, as are we bidding on the Wyoming stablecoin side. Currently, the blockchain gets heavily congested even with few active users and ongoing mints. That's not true. But it is true that congestion occurs. What's not true is that the congestion causes a significant issue. Please explain to me why any serious team would want to build on Cardano. Volume transaction user base is too low, leading to much less revenue compared to other chains. That's just flat out false. Increased coding difficulties in unique language. Well, languages. I don't think he's aware that Aiken exists. But maybe if you can't figure out how to write Rust code, you shouldn't be writing dApps. Lack of interoperability with other chains. Yeah, there does need to be more cross-chain transactions. And sex interest, it's mentioned up here. It is something we as an ecosystem have to resolve. No upcoming bullish updates for the chain outside the team spending resources building new chains like Midnight instead of improving Cardano itself. This is another lie. Yeah, it's absolutely true that certain VCs are not super interested in Cardano for historical reasons. That's probably a good thing, because that same set of VCs are the ones that brought you the Solanas and Polygons and others of the world and a lot of the other bad stuff. I can personally not think of a single reason why a team should build on Cardano. And that's coming from a founder of a Cardano project. This will be the last bull run for Cardano, and the chain will most likely get outside of the top 20 this cycle. Okay. Cardano needs to implement support for large stablecoins such as USDT and USDC. Cardano will become a completely obsolete dead chain if these improvements are not made. That's just not true. There's this FUD floating around that if only IO and the CF pay $10 million, instantly Circle would be on Cardano. That's just materially wrong. And I fully appreciate it can be frustrating. It's a lot easier when you have a dictator. Nothing makes sense to me. Dogecoin goes way up, it goes way down. It passes us, it falls behind. People seem to love asset-backed stablecoins, even though they're completely centralized and owned and dominated and operated by a single entity, which can freeze and reverse transactions. It's completely subject to regulation of a single jurisdiction. It's not crypto, but somehow it's an essential component in the crypto that we live in today. So that's why I don't play that game. I don't understand it. It's not something I get.
So this has been an ongoing thing, I think, with the Cardano community and Charles around just getting the liquidity of a stablecoin. Because as you guys know, being able to get into Cardano, the only real route is ironically through centralized exchanges of any existence out there that, in terms of safe route. And then you try to actually liquidate Cardano any side or any way outside of a centralized exchange. It pretty much doesn't exist there either. So the only way is to go back into a centralized exchange and do that. So this is the thing I think that we'll continue to see chains like this really struggle with this until they do get some sort of stable coin or stable token that is tied to it, at least for a liquidity standpoint. So interesting stuff. Point here with this episode is that there's a lot of things changing out there in the ecosystem of finance in general. You can kind of see right here just on Cardano's, their transaction numbers. This, of course, coming back after a big explosion here at the beginning of the year, almost dying right here in 24 in February, and then up a little bit and then down a little bit. Again, just not necessarily the traditional model of what we've seen in some of these bigger projects. But as I said, I think the key here is this, we're in really a big flux of change. And a lot of it is unfortunately being led by the traditional finance houses, which really control most of the liquidity in the open markets anyway. And what we're talking about is the 15 to 100 trillion that is potentially out there and what it might look like for all things, whether it's tokenized or not, and really the ecosystem of a new finance system starting to really boil into what is happening today. So a lot happening in the market. We'll continue to give you guys as many updates as we can. Make sure and subscribe to the channel right now. It's another great place to get more content. And of course, it will give you notifications when we do live streams, all that good stuff. You guys can catch me on X at Paul Barron. Catch you next time right here on TechPath.